Let's talk about Fargo, everyone. Basically, it's a bank that brought a very strong surprise. Above market expectations, 18%, making it one of the banks that surprised market expectations the most in this third quarter. In numbers, this represents an expectation of $1.28 in earnings per share, where currently earnings per share of $1.51 have been presented, which is exceptionally strong indeed. Let's take a closer look at how these financial data came in, as it surprisingly caught the market off guard. That's precisely why it's so good to look at expectations versus the actual numbers. We had a noticeable decrease in year-over-year growth because we saw a 1.8% decrease in revenue compared to the previous year. This year, we have 19.7 billion in revenue, which is down from 19.3 billion in revenue last year. The initiative was met successfully, but in terms of revenue, we are not seeing any significant growth. Basically, when we look at net income, which is all revenues minus expenses and costs involved, we had a very positive point, which is 5.2 billion in net income compared to 4.9% in the previous quarter, only falling short of the previous year's 5.7 billion. But if we compare the last 4 quarters, overall it was a great result. With that, transforming into earnings per share of $1.42, quite significant when we talk about a previous quarter and also a previous year. Folks, when we look at dividends, it is a company that is within the other banking sectors among its competitors. A 2.48% dividend is currently at 0.40 cents per share, given that we are talking about a stock priced at $65. When we look at the price trend, which is what makes us specialists, we essentially saw a very nice movement here. Indeed, we can say that after the balance sheet results were presented, the market rose by approximately 9%, which is quite strong, notably. Overall, this is a significantly positive outcome. When we look only at July and September, we do not see a good fluctuation. We have exactly a 4% decrease in the results in the valuation of the shares. Basically, it is now under new buying pressure. Is this an upward trend? Is it becoming an upward trend? But we are facing a significant risk, which is the test of the historical high. What does that mean? This means that in February 2018, the stock was worth $65 and then experienced a significant depreciation. In the memory of investors, this represents a value that requires a certain level of criteria and care. All right, so basically, we have here. It is indeed a bullish movement, but it is a test of the peak at $65. When we look at the distance, it is at this moment, after testing the average at the peak of 65, we see that it can and has the possibility of making a correction of up to 10%. Even with this bullish movement, it has this possibility of making this correction, okay? So basically, we are here with a good upward move, but in a dangerous region at 65. The market needs to break through and show us that there is a buying appetite above 65 for us to enter a trade for those who are on the sidelines. And for those who are already investing in the stock, know that the average price of this stock at the moment is $58 with a 10% possibility of correction. Okay? So that's how we are with Wells Fargo.